folks. How you doing? It's me, Mike Conlon from FXCDU. Can everybody hear me okay? Is my screen, can you hear me? All right, very good. That was Ed Ponzi, ladies and gentlemen, the only guy who is happy that Bernie Madoff exists. Anyway, as Ed just mentioned at the end of his webinar there, that we just had these the new home sales come out, or excuse me, the existing home sales figures come out. Let me get my screen up so we can take a look here, but it looks like we've got some trading action happening. Can everybody see my screen okay? How about the screen? Can we see the screen here? We should be looking at a 5-minute chart of Aussie USD. All right, it looks like Aussie's going down right here. We've got a little bit of an area of resistance here. I'm actually going to place a trade right now, if we can here. And I'm going to sell just 20 lots of Aussie USD. We're going to see what happens here. Now, basically, the idea behind this webinar is called Trading Made Simple. And the idea is it's just pretty simple. We're trading on price action, and we're attempting to use support and resistance areas as well as some other metrics in the market to go ahead and see if we can place good trades. Now, Aussie USD here, interesting scenario going on in the market. I know we've been listening to Ed a little bit earlier. Now, with this trade, I'm going to place just a tight stop on it right here. Let me see where I got into this. I'll show you. Just got in around, opened at 119.1280. Okay, so I'm a little bit down on this one. I'm going to place a stop just up here, just above this short-term area of resistance at 109.25. I'm just going to go ahead and do that right now while we're speaking. So everybody just bears with me a moment. Stop. And I'll go in at 109, let's just say 25 here. Okay. I'm getting a message. Can everybody see what I'm doing here on the screen with placing this trade? I guess the cursor's not lit up. Is that what's happening here? Can people see my screen okay? Anyone? 15, and that was 2 lots. I'm sorry, 20,000. It was too many lots. I apologize. Sometimes in the heat of the battle, we're just going ahead and placing trades here, and I didn't mean to misspeak myself. So it was actually too many lots, a total of 20,000. Nobody can see the camera action. Let me see here. Bear with me. I want to do let me see, the timed app. All right, and we should be right here. And how about now? There we go. Okay, can people see this? Can everybody see it now? Excellent. All right, what we're seeing setting up here on this Aussie, it looks like we got a little bit of a hanging man situation. I placed the trade here a little bit premature. Didn't get a great fill at 109.1280, and I just put a stop up here at 109.25, just above that area of 109.20, just for a quick trade to see if we can get a little bit of a reversal happening here. Now, we just got this little move higher on the existing home sales figures that came out, showing a gain of 5.1%. That's better than expected. So this could be a sign that the U.S. economy is doing a little bit better. Although, as I'm sure we heard in the previous webinar, the numbers coming in this morning have not been great. GDP figures came in under 2%, the advanced GDP figures, which that's not a good sign. Initial jobless claims were also higher. That's not a good sign. We're up around the 425 area. They were hoping for under 400. Look at my Aussie here. This doesn't look like it's going to come around. But I see another area of resistance up here, right around 109.25, excuse me, 109.50, and we'll maybe wait to see if we can get into another trade there. But as you can see, we just got stopped out. We lost 12 pips. Oh well, onward and upward, as they say. So with regard to the markets and what's been going on here, we've got a couple of different scenarios happening. And yesterday, obviously, Bernanke spoke, and he talked about what was going on with the Fed, what they're doing there, and you could see how the market reacted. Major dollar weakness, basically buying everything else. Commodity currencies, we've got Aussie up here, up over 109. All right, we've got the euro. Let's take a quick peek at the euro. Okay, you can see the euro's up at 148.50. We've got the pound also higher, just under 167. Okay. These are all very near recent highs, and we can go back and we can look at this from a longer-term perspective. And if you look at euro, take euro for example, you know, I think we're going to be at 150 here by the middle of next week, considering you know, if no major disaster happens. Now, you know, when we start getting to these levels, I always start to think about, well, gee, what could happen in the markets to derail, you know, this type of movement? And usually it's some sort of major risk event. You know, for a while the market's talking about, you know, risk on, risk off. Whenever there's some risk in the market, everybody plays that flight to safety trade and they buy the dollar. Well, you know, I'm not certain that that's going to be the trade now. I think the major risk in the market seems to be holding the U.S. dollar. Okay, it's obviously being debased by Bernanke and company. You know, Ed told you a couple of reasons out there why that was happening, and there's a lot of things that you know, take place behind the scenes, if you will, where, you know, they're trying to encourage this environment for growth, but it doesn't really seem to be happening. Okay, so we're looking at this. Wow, I'm looking at a nice big tail there. You know what? Sometimes I'm just a glutton for punishment. Right? And we're on the euro. I'm going to try and see if I can get a short off here on the euro. And we're just going to do another 2 mini lots. What did I hit there? Yes, okay. Another 2 mini lots. All right, I'm going to put my stop just above where this long tail wick was at 148.50. Now, this is probably just going to be a quick trade. And what I'm going to do is I'm going to switch over here and look at my little 1 minute scalping chart. All right, what I've got here is I've got a 3 standard deviation Bollinger Band set up. So I'm looking at the 3 standard deviation, the 2 standard deviation, and the 1 standard deviation, as well as the center line here. And what I'm hoping for is that as we come down through each standard deviation, we'll move a little bit lower. So we just hit the Aussie there, or excuse me, the euro there, and I'm just going to put my stop just above at 148.3. Now, you know, when we talk about some of the short-term trends that happen in the market, okay, we can see that. Hang on 1 second. I apologize. I'm just trying to walk and chew gum here at the same time. Whoops, I need to refresh my cam. Okay, just let me put my stop in here real quick if you don't mind, then I'll get right back to the 148. Yeah, we'll go there. That's fine. Let me see here. Can we see this? Can we see the screen now? Can everybody see the screen okay? All right. Perfect. So it looks like, man, every time we try and get one off here, it seems like there's a little bit of a pullback here, a pushback against us. But, you know, we're going to have to see what happens here, because one of the things that we've come to find out is that now bad news means good news in the U.S. economy. And the reason is that the worse the U.S. economy looks, okay, the longer Bernanke is going to have to keep his easy monetary policy out there. All right, now we talked about the end of QE2, and Ed gave us that great bathtub description and analogy. But it really comes down to this, is that the worse the U.S. economy looks, the cheaper money has to be to try and encourage investing behavior, to get GDP moving again, and that's going to be good for the market. So we're going to see things like oil. Well, maybe not oil, but we'll definitely see precious metals, gold, silver continue to go higher. Gold hit all-time highs yesterday in U.S. dollar-denominated terms. We've got silver just shy of $50. Oil actually is higher, but I wonder if it's going to continue as it has been in the face of declining GDP. So while you know, a lot of the higher oil prices have been due to weak dollar policy, all right, some of it has to be attributable to global growth. And if global growth is sinking, okay, if we have shrinking GDP here and say around the globe, then there could be less demand for oil prices as well. So we're going to keep an eye on oil. Oil's an interesting market to watch. All right, but I'm sure precious metals are going to continue higher. We had the Swiss franc making new all-time highs yesterday. Okay, that's now becoming a safe haven currency. And we actually have the Japanese yen. We haven't looked at the yen yet, but let's take a quick peek here at USD. I'm going to come over here. I'm going to come over here to USD yen. Okay, where is it? All right, you can see dollar yen here. Okay, dollar's been weak versus Japanese yen. Can everyone see the screen all right? I keep getting messages here that I need to refresh the camera. Can everybody see all right? I guess with the, you know, with the way the screen seems to be updating, that may be giving us some problems here, so I apologize if that's the case. I did short that trade on the long wick. on the 5-minute chart, which was just up above the Bollinger Band. I apologize for not answering that one. But that's what I was looking at here. Also, not only on the wick, but I was thinking about the better than expected existing home sales. Well, if we're getting better than expected existing home sales, then maybe that counteracts some of the bad news we've seen in the earlier GDP reports and some of the other numbers. And if we can get a ray of hope, and if we're sticking to the thesis that bad news is good news, okay, for the markets, meaning commodity currencies, commodities, and bad for the dollar, that perhaps good news will actually be good for the dollar, meaning dollar strength. So that was the logic behind that euro trade. Whether it works out or not is still open for debate. But you know what? These are all very low-risk trades that we're putting on here, and we're trying to take trades where we're just short, and we can just take very small risks. So that's one of the reasons. Oh, I apologize. We didn't have the Bollingers on there. Yeah, we've got the Bollingers on there. Okay. So anyway, so that's what we're looking at. We've got this euro thing going. It doesn't look so hot. We did try to fade the short-term trend here, and it looks like resistance is going to be up here around the high of the day is 148.75. By and by, it looks like dollar weakness is going to continue. We're at 3-year lows right now for the dollar. So, shorting right here may not have been the greatest thing from a fundamental perspective, but again, we got a decent low-risk opportunity, and I'm always willing to take those when they present themselves. So that's kind of what I'm looking at, what I'm trading here. We're talking about price action. We're talking about the way the candle's set up. Okay, I used the Bollinger Bands. Let's go back here to to sort of see times when we're at extreme price levels and see if we can get some trades off that we're at those extremes, because if we're right and we do get a reversal, then it's going to be a nice move lower. So that's what's really been happening in the markets recently. Obviously, dollar weakness, and Bernanke and this Fed, as Ed mentioned earlier, they may not seem to get it, and it's unfortunate, but there's a lot of factors that go on in the economy that we're unaware of, and when you think about what's going on with the U.S. government as far as fiscal policy is concerned, he's really not getting any help on the fiscal policy side of things. So, he's using this idea of monetary policy to try and, just make all this money available so that people are just going to run out and spend it, increase GDP, and things are going to move forward. But, I think he's really discounting the fact that, the public psychology here, okay, it hasn't been that long ago that we had the huge housing crisis happen, end of 2008, mid-2008, and people just aren't rushing out to buy homes. Not only are they not rushing out to buy homes, but banks aren't so willing to lend to people. All right, so we've got this declining asset, home prices. Banks are sitting there with all these mortgages on their books, and as home prices continue to decline, that raises the risk of default. So banks are holding on to their money because they may either have to A, cover those losses, okay, and B, they don't want to induce more losses. So, that's kind of why you've got these ideas about inflation where they're saying, well, we really don't have inflation in the marketplace. And if you think about it, the housing component of inflation, okay, there's, that's a big component of inflation. So when he looks at the core and he says, well, food and energy prices don't matter, okay, and other inflation is low, okay, he doesn't take into account that, that food and energy is something that affect all of us and not everybody's a homeowner. And that, gee whiz, if it's the banks that get into trouble, then the government's going to have to bail them out again. But at the end of the day, that may not matter to most, folks. I mean, it will. You don't want to have deflation, obviously, but by trying to encourage inflation through, just this cheap dollar policy, okay, eventually there's going to be, it's going to have to come home to roost. And that's one of the things that, I'm very careful about in the market is that, you have to consider when we're at some of these extreme levels that, once these levels start to break, that's when things start to go parabolic. If you think back to the oil spike that we had back in 2008 up to 147, it got up there pretty quick, and are they going to be able to control that? And, here we are, we've got oil prices 113 in the U.S., you've got gold back up to that 1535 level, and once they start breaking some of these levels, it could be off to the races, and at that point, what's he going to do? Well, he can't raise rates at that point. We've got this, unstable dollar situation happening. It could be an interesting time, to say the least. So, obviously we're watching Bernanke and what he's doing. So let me get some questions here. What's the longest time frame that I look at? Basically, I look at, for shorter term trading like this, I'm looking at 2-hour charts, 30-minute charts, 5-minute charts, and then I sometimes look at that 1-minute chart when I'm looking to do some scalping. The reason I'm doing that is I'm trying to find these support and resistance levels that are out there so I can see where, there may be times when currency pairs had trouble bumping up against that. So, for example, we're looking at Euro USD here. Well, we can see that the high was 148.81, but it looks like the actual the resistance is about 148.75. And we just like to use those round numbers because, we talk about the law of round numbers, that people just tend to gravitate towards these things, 148.50, which was right here, okay, providing initial resistance, and 148.75. So those are the type of charts I'm looking at and what I'm looking for. Let me see. So am I typically looking for price to move toward the outside of the bands, look for high likeliness of a pullback? At times that's what I'm looking for. Dry dessert, is it? I'm sorry. Basically, when you get those situations that arise, you don't just want to try and fade price action every time it makes the outside of a Bollinger Band or it puts up a big wick. But a lot of times those will be scenarios when you can get in and have a low risk entry, and especially if it's something where there could be some potential news that affected it, like, for example, that existing home sales figure, okay? It also happens that on this Euro trade, we were right ahead of 148.50, all right? I had a stochastic, if you look down here at the bottom, a 553 stochastic, which is showing very overbought. So there were a lot of different factors that were in line with this, and it was able to say, you know what, I'm willing to take this trade, even though the short-term trend has been up. I mean, if we look at this chart, I haven't seen any green or any red on it for about the last hour or so. So that's one of the things that I'm looking for. Let's see. Do I only scalp? No, I would say my style is more like day trading. And when I say day trading, it's usually, I'm looking for moves that happen. If I can get in earlier in the day, on a move, catch it earlier, for example. It would have been nice at the 9:10 a.m. area, 9:15, to have gotten long euro here. And I like the short here. I mean, I'm not just going to jump out of it because we're a couple of pips up, which, 7.3 pips. That might be something that a scalper would do. I'm willing to let this come down a little bit. I want to see if we can get a test of the middle Bollinger Band here, which is the 20-period moving average. So potentially a pullback to, say, 148.12, something like that, maybe ahead of there. So I'm going to watch that. Was I long in the 80s by any chance? Not exactly sure what the question is there, genius. But no, I didn't have any positions going in prior to this morning. But it's just, a lot of different market activity is going to govern the way that I trade throughout the day. I mean, sometimes we're going to get nice ranges where there's going to be some good movement. Other times it's going to be a lot tighter, and we're going to see tighter ranges. If we see tight ranges, then I'm more inclined to do some scalping and use that 3 Bollinger Band setup that I use. Okay, but if I think that we have a time when we can potentially place a trade that can go for a little while, and I can get a good low-risk entry like we did on this one, then I'm willing to let it go for a little bit more and see what happens. So, let's see. 147.80s. Genius. Yes, I'm with you. I wish I was long that as well. I actually was busy writing away my blog, which should be up anytime this morning. You can see it here on FX Street. It's called Forex and 4. It's got my daily commentary, fundamental, a little bit of charts happening, and when we can get it, the video as well. So, if you have a chance, please check that out here at FX Street, and also you can sign up for it at the blog itself. So, those are some things that you can look for. So, all right, so this Euro trade looks pretty good. And I want to go back here and we can see dollar strengthening versus yen. So it looks like maybe we're getting a little bit of wow, that was a nice trade too. You know what? I want to look at this right over here with the bullies, see how this looked. All right, it didn't look that great. No real great candles on dollar yen here, but you can see how these correlations are starting to pick up a little bit. So we've got I'm just going to go back, keep an eye on euro here. And let's see, we've got, sure enough, pound. I'm guessing probably we were early to Australia, and we could have been in there still as well. Yep, Okay, so looks like the Aussie trade was a little bit early. Maybe if we'd taken on a little bit more risk, but I don't typically like to take on a ton of risk, especially when you're fading these positions that have these shorter term trends intact. So when we look at something on a 5-minute chart or even a 30-minute chart, sometimes you'll see a couple of green bars or a couple of red bars showing either an uptrend or a downtrend. Okay, and there are ways that you can play those. I mean, once we were looking at euro there, sure, it looked like it was going higher, and maybe the conventional wisdom would have been to buy that. And if we look at it on a daily trend, you can see euro's been up just about I don't know how many days. Let's just take a quick peek here on the daily. Okay, and you can see boom, euro's just been climbing, but yet here we are. We're in a short trade, all right, and we're making money. So, that's okay. You can go ahead and go against a trend on a shorter time frame, okay, because there's going to be times when these things pull back, when trends reverse. It's called counter trend trading, and if you can get low risk entries at areas of support or resistance, and you can have some confirming factors like the Bollinger Bands, like a nice reversal type candle, perhaps a oversold indicator or overbought indicator, and those are going to be times you can play some of these trades. So right now we've got about 18 pips in the market happening here, which isn't too shabby. Which actually puts us positive now after that bogus Aussie trade, which we're a little bit early to, but that's one of the things that you have to you take the good with the bad. Sometimes you get into a trade a little bit early, maybe find something that looks a little bit better, and then you come back in and you just have to be vigilant with it. So it looks like we're stalling out here just a little bit on euro, but I'm still content to kind of let this go a little bit here. I want to see a test down here of this middle band. So about 148.12 is where I'm going to be hanging out, and I'm going to leave my stop up there right now. I don't want to move this to break even. I mean, who knows where this thing's going to turn around and reverse. But again, because it's just a 10 pip stop basically, or 10.8 pip stop, I'm not too worried about it. So I'm going to let that ride a little bit. What kind of risk to reward do I use? Well, it really depends on the day trades. To be honest with you, I have a mental sort of tabulation going that every time I get into a trade, the first thing I want to do is I want to try and keep the risk as low as possible. That's number one. Number two is I want to be looking for at least a 2-to-1 risk to reward. That doesn't mean that I'm necessarily going to get that 2-to-1, right? But I just want to be able to look at the charts and say, hey, what, is there at least twice as much as I'm risking in there? And for example, on this euro trade, all right, right where we shorted, okay, I'm looking at this target down here. Let's see, we shorted up at what was this price here? 42. All right, let's just say 43 even. All right, 20 pips. I risked 11 pips. I'm looking for about 22 pips. So 42 minus 22 is 20. All right, so did I think I could get that? Yeah, I mean, that keeps us firmly above the 20 period moving average here, this middle Bollinger line. All right, so I think that that's going to be the first area of resistance that we're going to test. So could I get that 2-to-1 in there? Yeah, absolutely. Now, if we get down to that middle area, all right, and we start to see some more selling, then I'm not going to be inclined to take this off. All right, maybe I might decide, well, if it has a little bit of issue, I may decide to split that position, maybe cover half of it, move the stop to break even, let the other half ride, or depending upon the price action, I may just let the whole thing go. So we're going to see what's happening here, but they're putting up a valiant effort right around this 148.25 area, but you can see that there's definitely some selling happening. Let's see here. I would tend to continuously follow the price with a stop loss and short-term counter-trend trading, which would be smart from my point of view. It depends. It's the kind of thing where, counter-trend trading, depending upon how strong the trend is that you're trading against, it could be the kind of thing where we're just scalping, and you're just taking a couple of pips here, a couple of pips there, because as these things, move higher and make these new highs or new lows, okay, there's going to be, little pullbacks that happen, and as a scalper, you could just bang those all day, all right, but you wouldn't necessarily want to use a trailing stop there because, with just the average fluctuation of a pair, good possibility you get stopped out. But, for this trade right here, I don't need an actual set of trailing stop on the system. All right, but I could potentially just come back in and say, you know what, I want to move my stop up and say we could move it down to, I don't know, 148.30 or something like that, which would lock in a gain for me. But I'm just concerned about, some of the fluctuation that's going to happen here. And again, I'm still waiting to see what happens right down here at this 148, let's say 15 level. By the time we get a couple of bars in here, this is probably going to move up. So say 148.15. So I'm watching this here for the next 5 pips or so. Let's see. I hit the 61.8 level for the short on the Fibonacci. I think I did. Genius, thank you. Which chart are you looking at there? Is this on a, let's see, 2 hour, 30 minute? What are we looking at here? This looks like a good area to run a Fibo from. I'm on a 2 hour chart. Let's see what happens here. Scalpers get scalped eventually, especially counter trend, but hopefully not me. Scalpers can get scalped, but you got to remember that you're taking these low risk trades, and especially if you're taking them in areas where you're at or near support or resistance, right? You have increased the odds exponentially that one of those levels is going to hold. Now, does it happen all the time? No, of course not. There's going to be times when it just blows right through that support or resistance, and there's just nothing you can do about it. And it's not to say that you always have to trade counter trend, because clearly you don't. But there's going to be a lot of times when, you don't have a good opportunity to buy a pullback in an uptrend. If we looked at Euro today, I mean, people who were buying it on the quote breakout where, we were attempting to sell it, well, they're down pips now. I would just prefer to be able to get in with a low risk entry and then, let the market do the work for me and see what happens. So let's see here. He's on the 5 and 15 minute. Do we have the 61 on the 15 minute? Is that where you are? Did you measure from down here? Let me do a quick Fibo. Let's see here. Let's do Fibonacci. I'm going to try from here to up here. And why can't I run Fibo? Oh, you know what? Oh, here it is. Okay. Sorry, I've got multiple screens going here. Sometimes, because we can only show one screen, that it doesn't pop up on all of the screens here. All right, this was on the 15 minute, and I'm not certain where Genius ran his 61.8 from, but I'll have to explore that a little bit later. But in the meantime, let me just get rid of this here. Remove the chart. Oh, perfect. And I took my Bollinger Bands off. All right, so let me go back and add the Bollingers again. Just a standard 220 setting here for those who are out there. Okay. A counter trend trade can sometimes be on the trend's reversal in the start of a brand new trend and can lead to many pips. Absolutely. Mike, perfect example. That's sort of the way that I like to trade these things because, trends don't go on forever. Things don't just continue to go up, up, up or down, down, down. There's eventually going to be a time when that trade does reverse. So many times, counter trend trade leads to a trend reversal, then trend reversal could lead to trend following. So, this is a way that you can sometimes get in early to some of the better trades. And again, the idea behind it is that, when you think about trading, everybody thinks, oh man, I've got to be right on every trade, and every trade I make has got to be, just perfect, and people get worried because they've made a wrong trade, or they had the wrong idea, or they got stopped out and it was a loser, and that's not what trading's about. All right, trading's about stacking the odds in your favor, all right, and being able to take low risks. For example, if you walked into a casino, and I hate to use casino analogies because that's not what we're doing here. But, from a quote betting perspective, these analogies will make sense. But if you walked into a casino with $100, okay, and that was all you had, all right, you wouldn't want to sit down on the $50 blackjack table. You probably want to sit at the $5 because you're going to give yourself an opportunity that if you lose, you're going to be able to stay in the game and that sort of thing. So, a lot of times when you're getting into these trades, it's just about finding low risk entry, okay? Not all the entries are going to be great. Sometimes they're going to be losers. Okay, we've got oil numbers coming out right now, I think. I just want to see if it's even questionable if these numbers even mean anything anymore. If you're Bernanke, I guess the oil market is traded on supply and demand, but I think most of us know different. and that oil is actually trading on Bernanke's own monetary policy. All right, so here we are. We're just touching here this middle band right at 148.15, just a little bit below right where we said we are. We've got about, well, we're back up here, but we've got about, oh, I don't know, 20, 30 pips going here. Now we're coming right through this middle Bollinger Band, which that's an important area that I like to keep an eye on because that usually, you know, is the first layer of support or resistance. Okay, so if we get a breakthrough like this and we can get this candle to close beneath that bar, then I'm probably going to stay in this and look for retest of the lows, perhaps down to 148, maybe even lower. All right, we're going to see. Boyke asks if I'm an impatient trader. I like to think I'm patient, but I guess we all have a certain level of impatience. I mean, instant gratification is ingrained in society today, which is unfortunate. But, you know, we want everything to happen, and we want it to happen now. Would I love for Euro to move back down to 147.75 now? Yeah, of course. That means I can pocket my cash faster and move on to the next trade. But, you know, in the meantime, you know, I'm trying to be patient with this, and, you know, you can see what's happening here. Okay, we're actually being patient right here at this middle band because we've got a little bit of a long wick happening. All right, and the body's just sitting up on top of that. So what we're looking for here is we're looking for this candle to close, okay, beneath that band. All right, the middle 20-period moving average. If we can close beneath there, then I'm going to expect that we have a good possibility that we could retest this bottom band. Now, if this continues to move lower, obviously the bottom band's not going to stay here at 147.75, but perhaps we'll get it to come back up to say 147.85.90, something like that. Thank you, Harley, for the compliments on the Euro trade. Let me see here. Would send me a link, but this does not allow private messages to copy paste. Let's see. Go to images section on FX Street. You can see net there. Not sure what you're referring to, Genius, but if you want to get in contact with me, or anybody wants to get in contact with me, you can certainly do so. My email address is just mentor, M-E-N-T-O-R, @fxedu.com. All right, and you know, as I've mentioned before, I do run the one-on-one mentor program at FXEDU, so I'm always happy to interact with folks, especially you know, our guys here at FX Street. So anytime. Let's see here. Boom, boom, boom. I'm sorry, Harley. Did you want that email address, or what were you looking for? Not sure what you guys are looking for here, but okay, you can see that we're getting a little bit of a pushback here. Happening just on this middle band here, and I'm hoping that we're gonna continue to push just a little bit lower. But let's take a look, wait and see. We're at that 14 level where I was before, and it looks like we've got about 2 minutes left on this candle. You know what I'm gonna do? I'm just gonna come over here to this 1 minute and see what's happening. You can see that we're sort of stalling out, and on the 1 minute, just to give you a quick analysis of what I'm looking at here on the 1 minute. Oh, I see. I'm sorry. I don't even know if I can write this in here, but let me see if this works. Mentor at fxedu.com. Did you guys get that? All right, there's my email address. What I'm looking at here on the 1 minute chart is this is a Heikin-Ashi chart, as I mentioned, with the multiple Bollinger Band setup. All right, so as we start to see these candles changing here, all right, we had a doji candle happen right here. That sometimes denotes that we're going to get a minor change of trend. So I'm going to come back to Euro right here, take a look, and you can see that we've set up just a little bit higher on the trade here, and it looks like perhaps this middle band is going to hold, which, you know, I'm not a huge fan of that, but I'm still confident in this trade. But I think what I'm going to do here is I'm just going to see if I can close part of this position. Let me see here. What do I want to do? I want to close the position, and I'm just going to take 10 off. All right, so we booked some profits. There, now I have a 10 position going, and I think I just need to change my stop. Let me see here, stop limit. Nope, it's still in there, so that's all right. I'm going to leave my stop there. Actually, you know what? I'm going to move the stop up. Let me do that. Let me move it up to, oh, I don't know. Let's go up to 148, say 30. All right, so we changed the stop now. And I've got it now at 148.30, which means I'm going to lock in another 12 pips. We took 23.5 pips on the first leg of the trade. We're guaranteed to have gains here. And now the hope, of course, is that we're going to retest these lows And I'd be looking to get out probably somewhere around 148 initially. Law of round numbers again, that always just seems to act as support or resistance. All right, but if it can break through there, possibly looking for a retest down here around 147.80. So that's kind of what we're doing here, folks. Just price action trading. We're just looking support, resistance, candle patterns. All right, we use the Bollingers to see when we're at these extreme levels, and I use the stochastic. I guess we haven't even really looked at the stochastic, just to give me an idea of the overbought, oversold in the market. I use a very fast setting on the stochastic of 553, just because I want to see multiple signals, because it's not that I'm using these signals to actually take the trades, but if I do see something on the chart that I like, I want to confirm it with the stochastic. So that's why I use a fast stochastic there. How much time do I spend looking at the daily, the 4-hour, and all these charts, etc.? Well, hard to say. I mean, that's basically what I do. I'm in front of the computer all day, all morning. So, once you're trading full time and you're looking at these levels, all right, they all start to become ingrained a little bit, and you sort of know where price is going to react and things of that nature. So there's going to be times when I don't spend as much time looking at the daily, for example, to see that euro dollar is in an uptrend. I don't necessarily need to know that. Also, if you take a look and we can consider, say, Aussie dollar here, just look at the daily chart. All right, this puppy's making new all-time highs every day. Whoops, that was the weekly chart. Let's go back to the daily chart. All right, this bad boy's making new all-time highs every day. So, where do you, what can you use to figure out the support and resistance on that? Well, you can use Fibonacci extensions and things like that. And to be honest with you, the last report I wrote at the beginning of the year on where I thought the Aussie dollar would go was right up here to 109, and it was based on a Fibonacci extension. All right, now I'd have to go back, redo the whole thing, and it's sort of, it's just hard to tell where exactly, to run it from. So right now we're trading on momentum. We've got this weak dollar happening, but, you can see with all-time highs, 110 doesn't seem out of the question. That seems like a nice big round number that the market would love to see. And a lot of times, these things just get attracted to these levels like magnets, and just boom, it just wants to pull price up to 110. All right, but the other thing is now is that, as I mentioned earlier, a lot of times when you see, things hitting these extremes in the market at these different levels, you start thinking to yourself, well, what could really derail this? What would make something like this happen? And, it's like you don't want to be a conspiracy theorist, but you want to keep an eye on all of these different situations going on around the globe and just, kind of playing the what if game. Well, what would happen if this happened or this happened or that happened? And they've got this big wedding coming up in the UK tomorrow, and it's happening on a Friday. I mean, you never want to hear anything go wrong over there, but you just never know where risk can pop up in the market. So anyway, so we still got the euro trade on here. I think it's doing all right. Let's take a peek. Let's see here. I've been following the SHI channel. They work very well. They just price low. All right, genius. I'm not sure what you're saying here. Let me see. Did I just close part of the position, or did I instead move the stop? I actually did both. Dry dessert. I closed out one of the two mini lots that I had, and I also moved the stop up so that I've got a 12.3 pip gain. And as we can see, all right, we're still moving a little bit lower here. And I'm looking for that close to happen underneath the middle band there. And if I can get that close to happen, then I'm going to hope that we can come back down to the bottom of the band. Ooh, there's a nice push there. Perhaps was a little bit premature rather, and taking off that first lot, but you're not going to go broke if you continue to take profits in the market. I mean, we can go through the risk to reward ratios that you should have and things of that nature, but you can constantly take profits. You're going to be profitable as long as your losses don't outweigh your gains. And if you have a system where you're taking low risks on every trade, then chances are you're going to be profitable. So, hey, it looks like we closed just beneath that 20 period. So I'm going to hope that we're going to come back down here to the bottom. I'm probably going to let this puppy hang out till about 148 even thereabouts. So we'll have to see here. Let's see there. Price. Yep. Aussie was a little bit too early. Thanks, Ray. It's sometimes it's tough. You're doing the webinars not to be a big baby or a complainer, but it's kind of like you're talking, you're watching things happen, you're looking for the better setups. And yeah, we reacted to the Aussie just a little bit quick. But, there are times when, that's going to happen. Maybe, you get stopped out the first time. You come back. You get stopped out the second time. But boom, that third time's a charm. And now you've got a big winner on your hands. So, those are the type of things that I look for when I'm, trading in that counter trend manner. And, to be quite frank, it's not that I always want to trade counter trend, but when you think about, how these webinars work, it's I'm here every Thursday at 10 a.m. and it's really, market dependent upon what's going to happen. So, sometimes we may just be twiddling our thumbs if the market's not doing much. So that would be a day that we'd probably do some scalping. And, we pop on at 10 o'clock this morning. We get an existing home sales number that was able to induce some market movement for us. Boom. It's not about, which style we're trying to trade, but about doing the right trade. So that's what we did in this situation. So anyway, any other questions from the peanut gallery? How's everybody else doing today? I'm not going to bang into any more new trades here. Let me just kind of see. Yeah, this is the 1 minute again, the scalping charts, and it looks like it's starting to set up a little bit of a bottom here. So maybe that 148.10 area is going to be pretty good. Do I follow the dollar index as well? Not so much. I'm more concerned about how the dollar is trading against individual pairs. I mean, it's kind of like, following the S&P 500. I know what's up. I know dollar index is down. I don't need to know the actual numbers. More importantly, I don't need to pay the fees required to get futures quotes coming in. I forget what it was, but man, last time I heard they were pretty expensive. Let's see, do I follow harmonic patterns? No, I don't, not typically. The style for me, it's just trying to keep it as easy as possible, and that's, kind of the title of the webinar, Trading Made Simple. Like we can, I can pull out dashboards and then bells and whistles and flashing lights and colors and all these other things, but at the end of the day, I'm trying to actually trade with as little as possible on the charts. And right now I'm at the point where Bollinger Bands and a stochastic is about as minimal as I can get. But, I used to work with a guy, an older time gentleman, who he just traded with just the line charts, or just the bar charts. Nothing else. No indicators, no nothing. Guy was a genius. So, that's always what I try and aspire to make it simpler, not to make it more complicated. And price action is basically the easiest way to do it. And, as we get to the end of the webinar, I just want to give a little spiel here about what we do at FXEDU. And, we offer trading courses that go into some of these techniques and some of the, price action patterns and things like that we use. And, of course, I run what I mentioned is the one-on-one mentor program. People are interested in that. I actually do one-on-one consultations and private, coaching, that sort of thing. And it's not about, setting up a specific plan where I say, okay, you have to do X, Y, and Z. It's really more about trying to help you supplement your trading to become a better trader with, however it is you like to trade. I mean, we have a lot of people on the webinar. Some guys are scalpers, some guys are intraday traders. Some people like to hold on for longer, be, swing traders or investors. And all those are okay. I mean, whatever sort of works for you in your own life and how you like to trade. And I can work with you and trying to help you mitigate your losses and expand your gains. So if that's something you're interested in, you can certainly reach out to me. Will I be trading the Euro CPI session Friday? Probably not. The Euro CPI is coming out at what time? To be honest with you, I've been slacking off a little bit lately, although I might be trading it. I think my wife is trying to get me up to watch this wedding happening, and I guess she's not familiar with the concept of DVR, but I may be taking a look at it. 5 a.m. EST, well, I guess we'll have this wedding thing happening, so perhaps I just may have to get up and do this. Thanks, Harley. All right, well, we're about to wrap it up. Does anybody have anything else before we go here? Scalpers in the group making more pips than swing traders. It depends. It's hard to say. I've got people that do a little bit of everything. That's just sort of how we go. We roll with the market. We don't try and impose our views on the market. We let the market tell us what we're doing. So, alrighty guys, that's what I've got for today. Again, it's Mike Conlon. At fxedu.com. You can come check out our courses if you're interested in that mentor program, or if you just want to reach out to me and say hi or tell me what I'm doing right or wrong. I'd be more than happy to listen to you. Again, it's at mentor@fxedu.com. And, take a look around for my blog here on FX Street. It's titled Forex in 4. Just gives you my early market U.S. commentary. And, of course, if you want to sign up for that blog, you can just go to www.forextradingblog.com. So that's all I've got for today, gang. Good luck in your trading, and have a great week.